A recent state study spent $214 million over a 4-year period hoping to improve the reading proficiency of 4th grade students. But the results were dismal. According to Nation's report card, 2 out of every 3 students didn't improve their reading proficiency at all. In fact, the 4th graders fell 8 places nationally. 200 years ago, American literacy rates were almost 100%. 100 years ago, literacy rates were 96% for whites and 80% for blacks. But today, half of U.S. adults can't even read a book written at the 8th grade level. The same story goes with life insurance. 84% of Americans know they need life insurance, but nearly half of Americans don't own any. This is different than in 1970, when 90% of American households owned life insurance. Go back even further to 1920 and 120 million lives were insured. Keep in mind that the American population at that time was only a third of what it is today. You might be asking, what happened? And why are people not purchasing life insurance that they know they need? Especially since the cost of life insurance has gone down since 1920. Let's take a look at what is causing this life insurance illiteracy in America, which means it's time to meet Eliot Spitzer. Eliot Spitzer was a defamed former governor and attorney general of New York State who proclaimed, "It's time to let science, not politics or rhetoric, lead us," and boasted that his job as attorney general was not to enforce regulations but to change industries. Next, let's consider Hollywood's numerous plots depicting life insurance agents as pushy salespeople, oftentimes scammers and frauds. Then take into account the lack of education around life insurance, middle-class income families, and it's no wonder that most Americans have become so life insurance illiterate, oftentimes believing it's way more expensive than it really is. To beat this illiteracy, the life insurance industry has tried to do what the American schooling system has done. As mentioned earlier, spending more money to develop new and more expensive life insurance products. These new products have fewer guarantees and higher risks for policy owners than the traditional whole life product. And the contracts are more difficult to understand, which just adds to the illiteracy problem. As seen from the study with 4th graders, where literacy rates actually dropped when a large spending budget was introduced, just spending more money trying to increase literacy oftentimes brings about but one thing: more illiteracy. This is because just spending money cannot replace the basics required to learn how to read. Same story with life insurance. With the creation of these new insurance products, Americans have just become more illiterate about what kind of life insurance they need, what kind of life insurance they can easily afford, and what kind of life insurance will provide them the sustainability they are looking for over their lifetime. It's time to get back to the basics. What kind of life insurance do you need? What kind of life insurance can you easily afford? And what kind of life insurance provides you sustainability over your lifetime? Participating whole life insurance is the product that fits the bill. It is the only product that guarantees you, the owner, a right to participate in the profits of the insurance company, that guarantees your cost of insurance will never rise, and that develops equity, also known as cash value, without risk to you. Because of this, participating whole life insurance is the product you can trust and rely on, not just for a death benefit, but for liquidity, tax-preferred growth, and sustainability during your lifetime. That is a good thing. But just like in the American schooling system, some people say it's too boring. Let's mix it up and throw in a little risk, just for the fun of it. And so it happens that people purchase the newer, albeit they flashy, insurance products like variable and indexed universal life products. But these products don't have the guarantees and sustainability of the traditional participating whole life insurance. Unfortunately, life insurance agents that are unethical are eager to sell these new products because it gives them more pocket money. Transferring the risk from the insurance company onto the policyholder means the insurance company can afford to pay a higher commission to their agents for selling these products. But just because something is new and exotic doesn't mean it'll be there for you when you need it. We recently did a policy review that is the perfect example of this. The policy owner purchased one of these new products and has paid $500,000 of premiums into it. But now, the cost of his insurance has risen so much that he can no longer afford to pay the premiums. Without premiums, this policy will lapse. And when it lapses, he will owe tax on $2.7 million because of capital gains. That's horrible. That is why the traditional participating whole life insurance with an affordable and comfortable premium is the best way to assure yourself that you will have the coverage you need for your entire life. Stick to the basics. With life insurance, that's participating whole life insurance, because participating whole life insurance will outperform any exotic product on the market today in the long run. Sticking with the basics will save you time, money, and help you build the financial security and stability that you are looking for. It's what Americans had 200 years ago, and it's what Americans still need today.